Alrighty, are you ready for me to start rambling? Because I'm gonna start, whether you like it or not. Okay, it's the Friday night update, which happens on Friday night this weekend, rather than on Sunday, which I did last weekend, but however, that's life sometimes. I have my glass of wine, the house is quiet, the kids are in bed, and the dog is in the other room, so it's time to start. All the dominoes are lined up and the stars are aligned. So I'm going to go through the 9 markets back to front from 4 hour down to 1 hour, and we'll see if we can make sense of what happened this week. In general, I think it was a fairly okay week, definitely in terms of the FX market, but we'll go into it in more detail, and let's see if we can pull any wisdom for next week out of this market. Okay, so here's the euro dollar 4 hour chart, euro dollar 4 hour chart, and as you can see, we've been tracking this contraction triangle for a long time now, a couple of months, since the end of May really, and so far so good. It's really gone quite well, and today was kind of a nice vote of confidence in our favor in terms of this larger count. The price over the last couple of weeks has fallen out of this triangle quite impulsively, and well, let's say so far so good for an impending 5 waves down in wave 5 of 1. So let's get down into this move and see if we can make any sense of it. So there's the end of the triangle wave 4. Get that into frame there. I think there's one of two things happening here. There's either a 1-2-1-2 pattern, so this could be this 1-2 here could be at 1 higher degree. I had expected a larger flat pattern for reasons, a larger kind of zigzag pattern because of this clear 5 wave delineation here higher. But obviously, because of the decline and the break below key support, which is now key resistance really, because of that occurrence today, well, that kind of altered this wave 2 into a strange kind of, how would you say, a real compact waveform. So I think it's an expanded flat because C waves are usually in 5 waves. So that's why I'll call this wave C. So we had a sharp move up in wave A, then a drop in wave 3, which could be counted as 3 waves, and then 5 waves up in C. So that makes that an expanded flat wave 2. And now we're moving down into wave 3 of, it could be either wave 3 of 1 of 5, if you can make sense of that, or it is wave, we have wave 1 and 2 already complete, and now we're moving down into wave 3 of 5. And that would be wave 3 in brown labels here. So this would be 1, 2, and we'd have a longer wave 3, 4, and 5 to complete wave 5 and to complete wave 1. Alrighty. So for next week, we're going to watch and see if we get a further 1-2 pattern develop here. So if we get a break back above initial resistance here, which would be 115.07, if we get a break back above that, then we'll probably call this a 1-2 pattern, a 1-2-1-2 pattern, and we'll work on that basis once it happens. But for now, I think we're going to continue with the current wave count, which shows a possible extension in wave 3 of wave 1. So take your pick on that one. We'll figure it out by the end of next week. But so far we're set up quite well. This has worked out. This wave count has worked out quite well for me. So let's see how it goes from here. Each day as it comes, eh? All right. So pound dollar. Again, pound dollar has moved nicely out of this contraction triangle again, and we're probably approaching the point where we will begin to look for a corrective rally and a possible wave 2. But well, for now, the eyes are still firmly lower for the next couple of weeks anyway, probably at least the next week in wave 5. Okay, so the yeah, as you can see here in the hourly chart, we have I think we could actually get rid of that alternate count there. Move that over there. That alternate count is obviously out the window now because we had this extension further lower in wave 3, and it's got a nice, it's within a nice trend channel. This spike low this afternoon was close but no cigar to the Fibonacci extension, but close enough that we can probably start to turn our eyes a little bit north here and look for a correction in wave 4 of wave 5. So we've got wave 1, 2 complete. We're down in wave 3. That's nearing completion, and it's close enough for us to start looking for a 4th wave, whatever that form that may take next week. And I reckon if the market starts pushing back up towards these interim little corrective highs, then that back up towards the 128.50 level, well then, at least back up above 128, we could start looking higher in corrective wave 4. Now this wave 4 should not break resistance there at 129.57, and the resistance is at 129.57 because that's wave 1. That's the low of wave 1, and wave 4 should not break wave 1. So we'll see how this pans out next week. We'll look for a correction in wave 4 and then a further drop in wave 5 of 1. And that is a wrap on pound dollar. Okay, keep it moving. I'm going to take a sip of wine. And that's purely for refreshment purposes. Okay, I'm kind of in two minds on dollar yen here. There's a very real possibility that that we may have an alternate account developing here in wave 1 and a possible wave 2. So let's get some markers on those. So that would be the alternate account. So we could have wave 1, 2, 1, 2 happening, and the reason why is because the reason I'm kind of leaning towards that right now is because of what's happened today. Okay, so that's the 4-hour chart. It gets down to the hourly chart. Here's that alternate count there, 1 and 2. The reason being is because we've got 5 waves down in a possible A wave. I had thought that this might have been developing into a triangle, but because we got a pip lower below that wave A low there at 110.58 today, we've got a little bit of a blip below that low, so that ruled out the triangle. I'm kind of leaning towards a possible flat correction now, maybe. So we should see that over the next, over probably Monday and Tuesday, we should see a rise, and it may well have begun actually this evening. You see in the aftermarket there we have this little spike higher. So we may have wave C begun, and we'll track that over the next couple of days, and then we should see this previous wave A form initial resistance that was 112.14. So we should see a resistance occur around there, and then we should see a further decline, possibly in 5 waves again, down into wave C of C. Wave C of C, or possibly wave C of 2, and I'm kind of leaning towards that wave C of 2 because of the clear corrective form of this so far. It has not developed into a 5-wave form as I expected in the current wave count, but however, we'll deal with each step as it comes. So over the next week, we'll be looking for a completion of that B wave and a move down into a C wave. Okay, so let's get to the stock market. This is the Dow, and again, we've had a nice little sell off the high there today. It leans in my favor in terms of the larger wave count, but again, we just cannot confirm it just yet. We've come very close to key resistance there at the previous wave 2. So while this count still it still stands, we have a possible wave 1 down and a possible double or a combination wave 2 or a complex wave 2. Completing in 5 waves in wave C. That still stands, and the fact that we had a sell-off today, we're now back below the 50 period moving average, and we're approaching the 200. And we had this nice consistent lower highs there in MACD, a definite nice break of the center line there again, actually in RSI today, because of that sell-off. Obviously because of that sell-off. But we had this kind of divergence in momentum from price, from the peak momentum there within wave 3 of C. Okay, so let's get down into the short-term chart and see if we can make some sense of that. If you're following me, if you haven't gone to sleep already. So this is the C wave here. And as you can see, it's 5 waves up, 1, 2, 3, 4, and 5. And this 5th wave completed in 5 waves, and we may now be getting 5 waves down. Obviously, it's yet to be confirmed on that front. I have this band of support here, 2 previous 4th waves. So if we get a break, definitely below 24,980 there, that's the lower 4th wave. So back into the low 24,900s. That'll be a nice vote in favor of a top again. But we'll take one step at a time with, as I've said about 15 times today already. So we have a possible 1, 2, and maybe a move down in wave 3 today. So early next week, we'll look for a very shallow correction in wave 4 and a further sell-off in a possible wave 5. So now we're going to start to look for these previous highs to look to form resistance in a possible developing 5 waves down. But that's what we'll be tracking over early next week for you guys. Okay, move on. Alrighty. So we'll get to gold. And gold, like I was saying there during the week, we have, let's see, the 4-hour Dow. We had these lower highs and off extreme highs, and bearish divergence in momentum from price, which was rising a C wave. So we had a falling momentum, rising price. And now in the gold market, I was talking about opposite signals. So we have this continual kind of higher lows now in 4-hour RSI. Let's see how the daily is one. The daily has completely bottomed out, and we're starting to look higher in RSI and in MACD from an extreme oversold position. So we've got 4-hour momentum, daily momentum, 4-hour momentum, and short-term hourly momentum, all pointing upwards right now. So despite the short-term counts still pointing towards one more low in a 5th wave, I think this momentum signal is definitely worth keeping an eye on, especially since we have a completing pattern in a possible wave 2. So 3 waves in wave 2 off the wave 1 high. So this is the daily chart again. So 3 waves down in wave 2, higher low again, and extreme oversold position in momentum. So, and divergence, bullish divergence in momentum. So for next week, we're looking for one final spike lower, possibly into the 1180. If you see the 1180, start buying. That's my plan anyway. And I'm a physical gold buyer. I like buying rolls, or I like buying. I like having my hand on the physical. That's my own preference. Maybe I'm just one of those kind of hermits that like looking at it. What's his name? Gollum. You could call me that. I'll call myself that maybe. All right. So there's the previous 4th wave high. stop the rambling now and keep to the point. Previous fourth wave high at 1217. So or 12, yeah, 12 higher 1217s. We want to see that high hold on Monday, and we want to see 5 waves down develop in wave 5 of wave C. So that's what we'll be tracking next week. One final dip, and then look for a bullish signal again. Okay, so crude. We have a nice 5 waves down in crude off the high, and we're looking at completing a 3-wave pattern. So we're looking at a pretty significant level Elliott Wave signal off the high developing right now in crude. So that's the 4-hour chart. The hourly chart looks like 5 waves down here in wave 1 in gray there. Now today I've changed this to show a possible larger wave 2 developing with an expected run back up into the high 70s, maybe in 71 to complete. We could be talking about the Fibonacci 62% retracement there, about $72 again. And you'd expect that in 5 waves. So we have 3 waves up in A, 3 waves down in B. And because we got this nice little spike higher, a definite impulsive look to that spike. So it could be the start of 5 waves up to complete a C wave, which would complete 5 waves down and 3 waves up. Hold on, I need to drink after that. Okay, my mouth is drying up. So we have resistance forming again at the upper 70s, and that's what we look for next week, a completing impulse wave to the downside, and we should see people getting incredibly bullish. Then if we get a break of 70, we should see people getting very bullish again, just in time for a nice sharp sell-off in wave 3. Okay, so let's move on. I'm doing quite all right this evening, aren't I? This is the S&P 500. Again, we've had in the S&P, we've had the same sell-off this evening, and we have a complete pattern, and we have 2 very viable patterns. I can't discount. Sorry, let's roll over that again. I've got a very viable alternate pattern here in a contracting triangle wave 4, and this contracting triangle does not count well in the Dow as it does in the S&P, because we got a secondary low below the February low or the early March low. We got a secondary low in March again in the Dow that we didn't see in the S&P. So this does count as 5 waves in a triangle. So we're kind of 50-50 between the current wave count and the alternate count. I can't, again, discount the alt. There's no point in discounting the current wave count right now, because we've got this sell-off today. We've got resistance still in place at 28.72, and we could see a 5 waves down again. Okay, so let's get down into the hourly chart. It's very early days in this in the decline. Again, it could pop. We could see a break of resistance on early next week, and that would trigger the alternate count. And again, it would still would not postpone the inevitable for very long, because here we'll show you the alternate count. The alternate count again is just a contracting triangle wave 4 with 5 waves up in wave 5, and that will complete probably around the 29.50 or something like that, and then that would complete the final high, and then we'd look for impulse wave down again. So either way, we're not. I'm not too concerned, but we're going to stick with the current wave count, and we'll see if this develops into 5 waves down next week. So that's excuse me, that's the S&P, and we move on to silver. Silver is showing the same, pretty much the same picture as gold right now. We're looking for a wave 2 to bottom. We've got a nice bullish divergence on the 4-hour chart, and again on the daily chart we bottomed out an extreme oversold position at a higher low, which is a bullish indicator, a bullish signal in the long term. So short-term chart for the hourly chart here, we're looking at this contraction in range again, just like in gold. We had 5 waves within a possible contraction triangle. We've got to drop out of that today. It's not entirely clear whether you could call that 5 waves down yet, but if we get a break of the previous wave 3, which is at which was at 1517, well then that will pretty much confirm the idea of a 5th wave down, and we're looking at the mid-14s to bottom for silver. And again, at that point, if this is going to happen next week, then that wave 5 should bottom next week, and by the end of next week, and we should be looking up by the following week. And that's the outlook for silver anyway this week. So let's move on to treasuries. Now we had a sharp move up. I was expecting a little pop today, but we got a slightly higher move than I expected, which does raise the possibility that we have a larger 3-wave pattern to an extended wave E to complete wave 4. So right now we have wave E at the recent high. That's the wave E of a triangle at the recent high. So here's our triangle, A, B, C, D, and E. We could still call this wave E as an extended pattern, which would probably threaten the 120, the low 120s. Maybe it should break 120.58 anyway. And we would not expect any break of the previous wave C, which lies at 121. So we don't want to see a break of 121, but it raises the possibility, the fact that we had this sharp rise today, that we could be seeing 5 waves up in possible wave C of E. That's the alternate count. But for now, we're going to stick with the 5 waves down and a possible 3 waves up. The way we can confirm this is if we get a break of 119.50 early next week. So if we get a sharp move down early next week to form another lower high, that'll be the best signal that wave 3 down. So we have 1, 2, and a possible 3rd wave down developing. So that'll be the best. That'll be the action to look out for. Okay. I hope you enjoyed that. I hope you stayed awake. I'm almost at the end of my drink, and it's Friday night. Hope you have a great weekend. God bless and Godspeed everybody, and we'll see you again on Monday evening. Have a good one. Bye-bye.